So historically, investors have looked to stocks to generate growth in their portfolios. Now you're talking here about many other ideas for achieving growth, but let's start here. Has something changed?
Well, one thing that's changed is that the stock market has gotten really, really expensive. It's gotten very fully valued. And what investors really have to understand is that the expected returns, the amount you can reasonably expect to make from a stock market investment, is just historically much lower when the market is selling at these kinds of PE multiples than it is when it's selling much cheaper PE multiples. You just can't expect to make a really big return right now with new stock market investing.
But you like to argue that there are more fundamental reasons for looking elsewhere also.
Well, that's right. Times have changed, and investing has to change with it. So just to pick one example everyone's familiar with is the tremendous renaissance that we've had in the U.S. energy industry. A lot of that value that's being created there is not really accessible by investors through traditional public stocks, but you can do better with private investments, you can do better with MLPs. So you've got, that's one example. Another one everyone is very familiar with is the venture world. My goodness, the pre-public companies are just hitting it out of the park these days. All sorts of money is being made in that area. And then, of course, there's traditional private equity, corporate buyouts as well. This is the best performing asset class for institutional investors over the years. So there are lots of things other than stocks to generate your returns.
So energy, venture cap, private equity, that list doesn't even include emerging markets.
Fantastic point. Emerging markets, obviously, look at China, look at Asia, look at Latin America, look at Mexico. Emerging markets are, they've got burgeoning populations, they've got an increasing middle class in a lot of these places. They've got the use of advanced technologies now. You don't have to lay copper everywhere in order to have a phone system anymore. And so the opportunities for these countries to do extremely well are really there. And as an investor, you want to be participating in that growth.
And it sounds like you can do so above and beyond just the equities.
Oh, absolutely. There are all sorts of ways. Of course, there's bonds, first of all, but there's also a lot of interesting private investments, infrastructure investments that you can make there. One of the things that's nice about making infrastructure investments in these foreign countries is you're not quite as subject to the nascent stock markets, these immature stock markets that, can be very volatile and unexpected. With assets that are like physically in the ground for a long period of time, you can be somewhat insulated from that.
Now, going back to the stock market itself, are there strategies that work better in fully valued markets than just investing in broad-based, long-only strategies?
There absolutely are, and I really advise investors to take a serious look at these right now. So probably the best example is activist investing. These are situations where a manager can really make something happen by predicting that a merger will happen between two companies, or sometimes even provoking a merger or some other extraordinary event in the corporate life. And you're going to see a lot more of that. Indeed, this year you've seen a tremendous amount of it already. We're hitting record levels of M&A. And so investing in managers who invest in that kind of a strategy and invest to take specific advantage of those kinds of events is a very attractive strategy right now. You can do that by going directly into an activist fund or through a mutual fund, a multi-manager or multi-strategy fund that itself is allowing an activist manager to manage a pocket of the mutual fund's money.